Hi, I'm Ashan at Inside Access. Today we have Yaveen Jayasekara, Head of Finance and Planning at Lanka Realty Investments PLC.
Now, one thing you need to keep in mind before trying to develop a habit of saving is how much can you afford to save? Now, there can be situations that you have a particular amount of income which you get every single month. Now, that is a finite income. It's not limitless. It's not unlimited. So, you have to ultimately end up saving a particular amount which you can afford to put aside. Now, the saving intention is not a very short-term intention. It's a medium to long-term intention. It's something that will perhaps serve you in good stead over the years. So the first thing you need to do is you need to do a check on your personal P&L or your personal profit and loss of your life. How much do you make as income? And number two, what are the expenses? Now, it's quite natural to have expenses which you have to incur on a recurrent basis every month, and there can be expenses which can come all of a sudden, for example an emergency health situation or another accident. So first thing you have to do is to identify how much you're making every month, and number two, identify how much expenses you do every month. Then from that balance you could put aside a particular amount as a saving. Now, one thing you need to keep in mind is when you're saving, you should ideally see if you could save this money not in the existing savings account which you have. You need to put aside your money into perhaps another savings account so that you won't have the opportunity to access it whenever you want, because as humans we have the habit of going and accessing money when we know that we have easy access. So the first thing you need to do, identify how much money you can put aside and perhaps create a thing called a standing order. Now, a standing order is a forced saving mechanism. This means that whether you like it or not, when you put a standing order on the day you get your salary, that's if you put the standing order on the day you get your salary, a small amount which you have already predetermined will go into this other account and will keep on accumulating. So that would be one step in cultivating a savings attitude. The second thing which I would suggest is once you identified a particular amount that you can put aside every month as a standing order, try and see, in addition to that, you could also take out something like an insurance policy, not related to perhaps health insurance, but a savings insurance policy, which would mean that every month, just like the standing order, you are committed to putting aside a particular amount of money. Because as human beings, naturally, we don't have the ability to be too financially disciplined. So because of that, a standing order and an insurance policy will be the ideal thing that we could utilize to create a savings habit. Now, when it comes to an individual, there are various savings options you will have. Some of these savings options are things you have learned from small days. Number one, when you were small, you would have been putting aside a particular amount of money, perhaps in coins, to your little till. But later on, once you become a bit more senior, more mature, when you become an adult, you have access to banks. Now, in banks, the most basic form of savings is having a savings account. Later on, once this money accumulates, then you have the ability to accumulate this savings and open a fixed deposit. But these are savings options that we are aware of. But in addition to this, there are more advanced or more sophisticated methods of saving. Now, for example, these are not known merely as savings, but these could be classified as investments. For example, take real estate. If you have a sufficient amount of money, you have the opportunity to buy some real estate or land. When I say real estate, it could be a land, it could be a house, it could be an apartment. So real estate is one option you have. Another option where you could invest money would be things like gold, which is something that is very, very commonly used in countries such as India. And in the world markets, gold is considered as a defensive commodity, which means that when currencies go against you, when share investments go against you, when other fixed income investments go against you, gold is something you could invest in. In addition to savings, what I want to emphasize is savings and fixed deposits in banks are not the only way you could save. You also have this category of investments called money market accounts. Money market accounts is also more or less getting a very high return, something similar to a fixed deposit in a savings account format. So you have investment management and asset management companies that provide services of opening money market accounts. So in addition to savings and fixed deposits, you can also easily take advantage of money market accounts and things like real estate as well. Now, when it comes to selecting the right investment that works for you, we have to realize that our personalities, our needs and wants, our requirements are very different. Just because two people earn the same amount, that does not mean both people would ideally want to make the same kind of investment. Because some people want to take a bit of risk, whereas some people want to play it safe. When you move along your life cycle in your life, we find that people who are more younger, maybe in their 20s, 30s, can afford to take a bit more risk. So they would obviously invest in fixed deposit investments in finance companies and other companies that offer a higher yield. However, as you tend to become older and more senior, we realize that people don't want to take as much risk. When things like that happen, people decide to make investments in stable establishments such as banks. I'm not saying that finance companies are not stable, but the comfort and peace of mind is what more senior people prefer when it comes to making their investments. And also, touching on perhaps things like the share market. The share market is also amazing platform in order to grow your investment. But generally, people are advised to dabble or invest in the share market at the early stages, because later on, as we know, share market can demonstrate a lot of volatility. It is not exactly ideal for the senior person, because when you're in senior age, sometimes you may not be able to absorb the losses that come with investments in the share market. You would ideally want a stable and consistent income, which can only be derived by making investments in things like fixed income. However, you also need to keep in mind your liquidity requirement, or how soon you need your money. So, for example, if you need money in 2 or 3 months for a particular project or for a particular expense, you can't afford to put your investments in a 1-year fixed deposit. So, based on your risk and return profile of the particular person, as well as the liquidity requirement, the investment type and the investment tenor will vary.